Welcome everyone to my channel. This is Odun Business Consults. Today we are going to look at special treatment in financial accounting that has some kind of technicality when it comes to examination. Okay, so I've picked a very technical but easy to understand topic in financial accounting, and it has to do with provision for doubtful debt in financial accounting. So by the time we finish watching this video, or by the time we finish following this lesson, you'll be able to understand what is meant by provision for doubtful debt, what is meant by or how to treat it in the final account of a sole trader. Okay, so that is what we are going to look at. We are going to use a practical question to do the presentation. Okay, and if this is the first time of you watching my lesson and you have not subscribed to my channel, please do well and subscribe it for me, and also click on the bell icon so that you get a notification for any future lessons. Without wasting much time, let's get started. So we are going to use this one portion of this question, or a section of this question, to do our teaching. So if you don't have a copy of the question, you can pause the video and have a copy of the question, so that you following me will be much easier for you. Okay, so the question starts from here. We have been considering this in our previous videos, and has to do with trading profit or loss accounts, and it's a May-June WASI question 2009. So you can get a copy somewhere and you follow me throughout the lesson. Okay, I have my solution boards here. I'm using Excel. So I'll just make a blank space. Yep. So let's see what we can do. So we are going to use this portion of the question which says provision for doubtful debt is to be made at 5% of trade debtors. Okay, so we have our provision for doubtful debt, which is 9,000 in the trial balance. We have our trade debtors to be 165,000. Okay, so this is what we are going to use in our presentation. So now let's continue our presentation, or let's start the working itself. Now when you say provision for doubtful debts, now the simple meaning that you can get, let me make it easier for you to understand it. At times, or most often, businesses, for them to maintain their customers, they often sell their products on credit to some of their customers. Okay, they sell some of their products to their customers on credit. They will pay. They will sell it now, or they will sell it to them now and give them some few days or some few weeks or some few months to make the payments. Okay, so when they sell the goods to them, let's say today, they are not expecting them to pay it promptly, in order to have a good relationship for their customers and also to maintain their customers. You know, in the business world, it's full of competition. So if you don't give some kind of treatment or some conditions to your customers, your competitors might snatch them, or they will take them from you. So in order to keep their customers and also keep their business going, they normally sell their products or some of their products to their customers on credit. And when this happens, the business stand a chance of, or they have some kind of business risk. Okay, the risk that I'm talking about over here is that some of the customers may not be able to pay the money, or they will refuse to pay their money due to one or two reasons, or some of the reasons could be a bankrupt, the person is no more, or he's dead, and so on and so forth. So if you sell a product to a customer and the customer goes bankrupt, he doesn't have money to pay you back, obviously you are going to lose money, okay, or you're having some kind of risk. So businesses always face some kind of risk in terms of selling their products on credit to their customers. And in accounting, when you are presenting your trading profit or loss accounts, we follow certain principles, okay, and one of the principles is that, or one of the principles is prudent concept, which states that accountants are not supposed to overstate profits, and they are not to understate losses, and they shouldn't also fail to provide for any future expected losses. Okay, so they are to make provisions for some losses or some anticipated losses. So the moment you sell goods on credit to your customers, there is an anticipation that some of your customers will not be able to pay their money. Okay, it is an assumption, or it is an anticipation, or the business will be in anticipation that some of the customers will not be able to pay their money, or the money that they are owing them when it is due to one or two reasons. Okay, and when it happens that way, or when the business have this kind of information in mind, then because the prudent concept mandates accountant not to understate losses, they should make provision for such occurrences, okay, so that when it happens in the future, it wouldn't distort the full meaning or the meaningful or the usage of financial statement that they've presented. So one of the provisions that they make is on debtors. Okay, so provisions for doubtful debt is money that we put aside to cater for future losses that will arise from our bad debts, or that will arise from our debtors, which is known as bad debt. Okay, debt or debt that cannot be recovered is known as bad debt. Okay, something that we cannot recover, or the money that we're expecting from our customers, we will not be able to get it from them. So if we are saying that we cannot get all the money from our customers in the nearby future, so why don't we provide for that? Okay, so that's why always businesses or accountants make provisions for such occurrence, because once we have debtors in our books, we have people who are owing us, then there is a possibility, there is a likelihood that some of the customers will not be able to pay their money when it is due. So provision for doubtful debt is money that we set aside to cater for any bad debts that will arise in the future. Okay, money that we put aside to cater for any circumstances like bad debt. And like I said, bad debt is something, or is money that we cannot recover from our customers. Okay, some of our customers may not be able to meet our demand, or may not be able to pay their money we are expecting from them due to bankruptcy, or due to, let's say, collapse of their businesses, and so many other factors that we can think of. So provision for that doubtful debt, it is being mandated by accounting principle, which is the prudent concept. It mandates accountant to provide for such occurrences, such as bad debt. Okay, so how do you treat bad debt in the final account? Now, if bad debt is created for the first time in our books, okay, if it is created for the first time in our books, so assuming, let's say, in 2010, it is the first time that the business is going to provide for bad debt. This is how it's going to be. So always we open our provision for doubtful debt, provision for doubtful. Okay, so debt that we are having in anticipation that we cannot recover. Okay, so doubtful debt. So we open the account like this. I believe you know how to open a T account. So follow me like this, or you do it like the way I am doing it. So we have our account like this, and if this is the first time the business is making provision for doubtful debt, so using this illustration, assuming this is the first time that the business is going to provide for doubtful debt, now this 5% on trade debtors will be taken to the profit and loss account straight away. What do I mean? So let's find the figure. So they are saying that 5% of our debtors is to be made. So 5% of our debtors figure, which is 165,000, is to be made as what? Doubtful debt. We are saying that 5% of our debtors money cannot be corrected or cannot be recovered. So we should provide for that. The business is anticipating, okay, based on information that they have, okay, based on maybe past practices or so on and so forth. They are saying that 5% of this amount cannot be recovered. So if it is the first time that the business is making such provision, how do we treat it in the account? So let's say 5% on 165,000 will give us 8,250 cedis. So 5% on 165,000 will give us 8,250. So just write 10 over 100 times 165,000 on the calculator and you get it. Now it is the first time. Let me indicate my currency sign. Don't forget that in the examination. If it is the first time that the business is making provision for bad debt, this is how you treat it. Okay, this is how you're going to treat it. Now, because provision for doubtful debt is an expenses or is a loss, it will be at the debit side of the profit or loss account. Okay, to be at the debit side or to be at the expenses side of trading profit or loss account. Okay, why are we saying it's an expenses or it's a loss? You sold something on credit to your customer and you are saying that 5% of the amount that you're expecting from the customer cannot be recovered or you cannot get it. It's a loss to you. Okay, you sold goods valuing about 10,000 cedis and you are saying that 5,000 out of the 10,000 cannot be recovered from that customer. It's a loss to the business. So that is why to be at the debit side or the expenses side of the profit or loss account. And if you are going to debit that account and using the double entry principle, we are saying that for every debit entry there must be a corresponding credit entry. So the credit entry will be in the provision for doubtful debt account in the name of profit or loss, in the name of what? Profit or loss. So it will be how much? 8,250. Okay, to be 8,250. If it is the first time that the business is making provision, this is how it's going to be. So when you go to profit and loss account, you send this amount at the expenses side or the debit side of that account. So assuming this is the first time you are having such thing in your books, or it is the first time you are making provision. If you are done, you have to close this account, and I believe you know how to close an account. So here at the end of the period, we write balance carried down. I believe you know how to balance off an account. Okay, so here you're going to write balance carried down, which is 8,250 cedis. So let's close the account. We are having 8,250, and here too we are having 8,250. So let's close it nicely. We are closing the account. We have a button. Okay, so here too we have to close it. So we are done. So if the balance carried down is at the left hand side of the account, technically or obviously the drawdown will come to the right hand side of the account, right? Okay, so we have balance drawdown. Okay, we have balance drawdown, which is 8,250 cedis. As simple as this. So if this is the first time that the business is making provision for doubtful debts like this, or if you get information, additional information, and it's the first time, if I say there is it's a first time, meaning there is no balance for provision for doubtful debt on the trial balance. Okay, here we assume there is nothing here. If there is this is the first time the business is making provision for doubtful debt, now you only get that information in the additional information. You see something like the provision for doubtful debt is to be made at 5% on trade debtors, something like this. Then you not get any balance or any amount relating to provision for doubtful debt on the face of the trial balance. If you see something like this, it means it is the first time the business is making provision for doubtful debts, unless the question states otherwise. So always, I beg, read the question very well for you to understand. I'm assuming that there was no provision for doubtful debt on the face of the trial balance. Okay, that's my assumption. So if that's the case, this is how you treat provision for doubtful debt in the books of the business. Now, somebody asks, what would I do with this figure? You take this figure to the balance sheet. You have to reduce your debtors figure by this amount, because we are saying that out of the 165,000 that we sold to our customers, okay, out of this amount, let me show it to you. Out of this amount, okay, 165,000 that we are expecting from our debtors, this cannot be recovered from them. That's the meaning, that's the implication, provision for doubtful debt. Okay, so the balance brought down on this account will be taken to the balance sheet, and under the current asset where you have debtors, the debtors figures will be reduced by this figure. Don't forget that in the examination you have to treat it this way. So the balance brought down on the provision for doubtful debt account will be taken to the balance sheet, and it will reduce the debtors figure. Put it in your mind, because the implication of this is that we are saying that the amount that we are expecting from our debtors, out of that amount, 8,250,000 Ghana cedis, 8,250 cedis cannot be recovered from our debtors. Okay, so we are saying that 8,250 of such amounts that we are expecting from our customers cannot be recovered. And the prudent concepts, accountants are not supposed to be overstated, or they are not expected to overstate assets, they are not expected to overstate profit, they are not expected to overstate liability or understate liability, and so on and so forth. and because of that, the debtors figure that will be shown in the balance sheet should be reduced by this amount. I believe you've gotten it now. If you still don't get it, leave your question in the comment section and I'll attend to you. So this is how you present your provision for doubtful debt if it is the first time that the business is making such provision, and I've shown you how to identify if it is the first time the business is making provision for doubtful debt in trading profit or loss account. Watch the video carefully and you will get the understanding. Now let's look at the second scenario too. So let's erase everything here. Okay, let's erase everything here. Let's erase everything here. Now, assuming in the question, like what you see over here, provision for doubtful debt, there is an amount relating to provision for doubtful debt. It means if you see something like this, it tells you that this is not the first time the business is making provision for doubtful debt. It has been making provision for doubtful debt in the previous accounting year. The moment you see any item on the face of the trial balance relating to provision for doubtful debt, meaning the business has been providing for provision for doubtful debt in the previous accounting year. So if you see something like this, what do? You just copy this just copy this amount for provision for doubtful debt and paste it in the provision for doubtful debt account. I know that here is the credit side of the trial balance, and if this amount is being found at the credit side of the trial balance, what do? You just paste it at the credit side of the provision for doubtful debt account, and the amount is what? 9,000. So you just go to your solution and you write balance brought forward. It's so easy. Brought forward. At times some students get it very confused. So the amount is how much? 9,000. Like this. And what is left again? Now you go back to the additional information, look for provision for doubtful debt. So let's take our question. For instance, we have provision for doubtful debt is to be made at 5% of trade debtors. So we are saying that for this year, the provision or the amount that we are not going to recover from our debtors is 5% on our debtors figure. Okay, the amount that we are not going to recover from our debtors is 5% on our debtors, and always this amount will be the balance carried down that will be taken to the profit and loss account. Put it in your head. Always the provision in the doubtful debt, provision for doubtful debt in the additional information will be the balance carried down on the provision for doubtful debt account. Okay, because that amount will be taken to the balance sheet. It will reduce the debtors figure in the balance sheet, and as I said, the balance carried down or the balance brought down will be the one that will be taken to the balance sheet under the current assets, or it is the amount that we reduce the debtors figure by. Okay, always the one in the additional information is the one that we are going to use to reduce our debtors figure, because that is the current information, that is the current provision for doubtful debt. We are saying that for this year the amount that we cannot recover from our debtors is this, and that one will be in the additional information. The one that you see on the face of the trial balance has been catered for in the previous accounting year. And when you are using matching concepts, we don't use information relating to the previous year in the current year. Okay, the trading profit and loss account only contain information for the current year. So if I'm saying that, or if you are saying that the one that we see on the face of the trial balance is information relating to the previous year, then we cannot use that one in the trading and profit or loss account. Okay, we cannot take that amount and send it to the trading profit or loss account, because that amount has been already been catered for, or the treatment has been done in the previous accounting year. So that's why we bring it as balance brought forward at the credit side of the account, meaning this balance has been brought forward from the previous accounting year, and the treatment for that has been dealt with already. So what we are only concentrating on is the one in the additional information, which is this one. So this is the current one that we are to pay much attention on. Okay, so this is what we are going to reduce our debtors figure by. Okay, so we are saying that the current year, the amount that, or the money that we cannot recover from our debtors is only 5%. So if you go to the balance sheet, you reduce your debtors figure by only 5% of your debtors figure. And as I said in the previous video, we take the balance brought down. Okay, we take the balance brought down on the provision for doubtful debt account to the balance sheet, and the balance brought down will be at will be the same amount for balance carried down. And how do we get the balance carried down figure? We get it from the additional information. Okay, so always the provision for doubtful debt accounts, or the provision for doubtful debt in the additional information, will be the balance carried down on that account. So let's see how we can do the working or the recording the T account. So we are saying 5% of our debtors cannot be recovered. Okay, 165,000. So if you use 5% on 165,000, you are getting 8,250 cedis, and that one will be the balance carried down. So always the balance carried down figure will be the one in the additional information, and the balance brought forward will be the one on the face of the trial balance. And this is how we record it. Okay, so once you have the balance carried down at the left hand side, what do you think? Where do you think the balance brought down will be? It will be at the credit side of the account. So here you write balance brought down, which will be taken to the the balance sheet. Okay, so it is so easier and simple, and I believe you know how to balance off our account. Now it is time for us to balance the account. You check here and you check here, compare the figure. So here obviously the credit side is having a bigger amount. Okay, here the credit side is having the bigger amount, so the amount, or the bigger amount, becomes the total for the two sides. So we have our 9,000 here, we have our 9,000 there. We are not done. You see that here we have only 8,250, but the total is 9,000. So where will the difference go? The difference will be sent to the profit or loss account. You see, this one is different from the first example that I showed you, profit or loss account. Okay, so what will be the difference? So 9,000 minus, punch it on the calculator, minus 8,250, you are getting 750 cedis as provision for doubtful debt to be taken to a profit or loss account. So this is how we will present the provision for doubtful debt for this information, or for this question. Very easy and simple. Okay, so if it is not the first time the business is making provision for doubtful debt, it means only the difference or only the increase in provision will be taken to the trading profit or loss account. Only the increase or the decrease will be taken to that account, because we have already provided for this in the previous accounting, and the current year provision is what? Is 8,250. So if you compare the two, if this is the previous and this is the current, you only take the difference between the two and take it to the profit and loss account. Okay, so if you get the difference at the debit side of the provision for doubtful debt account, it means there has been an increase for provision for doubtful debt. Okay, and it keeps on changing depending the debtors figure. Okay, if the debtors figure goes up, it means provision for doubtful debt will also go up. It it means the risk of you losing some of the money from the customers will go up, and you have to make an increase in provision for doubtful debt. Okay, if the debtors figure reduces, then there will be a reduction in provision for doubtful debt. Where the more your the less your customers are owing you, the lesser risk you are being at in terms of bad debt. And the higher the amount your customers are owing you, the higher risk you are standing in terms of bad debt. Okay, so if you also get the difference at the other side of the provision for doubtful debt, it means, sorry, in the previous one I said if you get the difference at the debit side of the, if you get the difference at the debit side of provision for doubtful debt, it means there has been a reduction in provision for doubtful debt, and it's a plus for the business. It means what we provided for in the previous year has reduced drastically in this current year, so it's a positive figure for us. And here to be taken to the revenue section of the trading profit or loss account. Okay, so once it is being seen at the debit side of the provision for doubtful debt, it means the provision that, or the losses that we are anticipating from our debtors has reduced drastically. Okay, it has reduced drastically, and the provision that we made for we made provision which is more than the actual provision. Okay, the provision that we made is more than what actually occurred. Okay, the actual bad debt or the actual provision for doubtful debt has reduced drastically as compared to what we provided for in the previous accounting year. But if you see the difference at the credit side of the account, it means there has been an increase in provision for doubtful debt. It means our debtors figures has gone up, and then the losses that we are expecting or that will arise from bad debt is likely to be high, because the more your debtors are owing you, the higher risk you will be at in terms of bad debt. So always, if you get the difference at the credit side of the provision for doubtful debt, it means there has been an increase for provision for doubtful debt. And if you get the difference at the debit side of the provision for doubtful debt, it means there has been a reduction. Okay, there has been a reduction in provision for doubtful debt. So make sure you understand the two scenario. Okay, always one thing will happen, you will never get to, especially when you are treating profit or loss accounts. Okay, you either get the difference at the debit side or you get it at the credit side, so bear in mind. And when you get it at the debit side, you know the meaning, and when you get it at the credit side, you also know the meaning, because in the examination or in the objective test you can miss something like this, and the question will say that maybe the provision being found or the difference being found at the debit side of the provision for doubtful debt represents what. Okay, and they will give you a range of options that you have to choose from. So as I said, if you see the difference at the debit side, it means there has been a reduction in provision. There has been a reduction in provision for doubtful debt, and for that matter, that difference will be taken to the credit side of the profit or loss account. But if you get it at the credit side of the provision for doubtful debt, it means there has been an increase in provision for doubtful debt, and that difference will be taken to the debit side or the expenses side of the profit or loss account. So this is how we can treat provision for doubtful debt in our books, and this is the meaning of it. So in today's video, I've shown you how, or the meaning of provision for doubtful debt, and I've shown you how to treat it in the books of the business when it is the first time the business is making provision for doubtful debt, and how to also treat it in the books when it is not the first time, and the meaning we have when the difference is being shown at the debit side, and the meaning when the difference is being shown at the credit side, and how to treat it in the books of the business, and how to treat the balance brought down on the account in the balance sheet. As I said, you would deduct this figure from the debtors figure, in the balance sheet. And how to get this figure, I said you get it from the additional information. Okay, you get it from additional information, and this figure will obviously come from the balance brought forward, will obviously come from the trial balance. So you get this figure always from the face of the trial balance. Okay, pay attention to the question always. The question will always direct you as to where certain figures will be coming from. But at this level, most often the questions are straightforward. This figure you get it from the trial balance, this one too you get it from the additional information, and just try the difference, and the difference will be sent to the trading profit or loss account. Thank you very much for watching. If you still don't get anything, leave them in the comment section. If you have not subscribed to my channel, do well and subscribe to my channel. Share my video, comment on them, and I'll be happy for that. Thank you for watching once again. See you soon.